Okay, looks like we are live. Welcome to another Properties and Beers with myself, Gaurav Gupta. Today's all about Australia being the lucky country. That's right. So, you know what's wild? Australia just jumped from the 10th wealthiest country in the world to the third in just 1 year. Sounds impressive, right? Until you realize that most of the wealth actually isn't sitting in people's pockets, it's sitting in property and super. And while that looks great on paper, most Aussies aren't actually feeling any richer. So it got me thinking, right? If property is driving so much of this wealth, how can the everyday investor make smarter, more resilient choices right now, especially with all the noise that's in the market? And before we get started, right, those that don't know, because this is on public, I'm Gaurav Gupta, CEO and founder of Ethical Property Investments. We help everyday Aussies, just like you and me, invest in high cash flow, ethical properties that do good and make money. So I'm hearing the same questions everywhere from people. Kind of perform property? What kind of property still performs if the market softens? And one strategy that keeps delivering even in unpredictable time, in my opinion, is co-living. So tonight we're going to cover three things. What's really behind Australia's wealth jump? Why co-living performs even in downturns? And number three, the biggest misconceptions people still have about co-living. And before we wrap up, I'll share details about our upcoming event, Co-Living Deal or No Deal. That's right. Plus a pretty amazing grand prize for one lucky family. But first, this is Properties and Beers. And here's what I'm having tonight. So we have Johnny Walker Black Ruby, Scotch whiskey with blackberry and soda. Yes, this is a thing. Let's crack it open. And if you're having something, drop a line in the chat. Let us know what you're having as well today. See, there's a couple of you watching, so make sure you interact with us. Interesting. Hold on. You know that's really similar to? It's kind of like CC and dry with added raspberry juice. It's really interesting. Um, it's a maybe. It's not a no or a yes. It's definitely a maybe. So if you're having a drink, drop it in the chat. Let us know what you're having. So let's start off with Australia's wealth ranking. That's 10th to a third in just 1 year. Now, that doesn't mean we all got pay rises. What it really means is that there's more value sitting in superannuation and property assets. You know what? We're wealthier than ever on paper, but many Aussies are still feeling poor in practice because superannuation doesn't pay your bills today, does it? And that, my friends, is the gap between wealth and cash flow. You can't eat equity. You can't live off capital growth unless you sell, of course. And that's why smart investors focus on properties that really work for them every week, not just look good on a spreadsheet. And that is exactly where co-living quietly shines. And there's this misconception about what co-living is with so many people. And part of the misconception is that, hey, it's only for students, only for tradies, or it's these rundown boarding houses, which a lot of, especially older people, have this misconception of that's what co-living is, and it's really not. And that's why I don't, even though legally these houses are classified as boarding houses or rooming houses, I don't like the word boarding or rooming specifically because it's more co-living than it is boarding, right? In the general sense of it, because it's not a rundown, hotel room with like 50-year-old furniture, right? That's not what co-living is. Now, let's talk about market sentiments and co-living. Before we do that, we have to have another sip. Now, when the market slows down, most investors tighten up, but co-living investors don't actually feel it the same way. You can't actually control interest rates, but you can control your own income model. Here's why. When you've got a situation where there's multiple tenants, multiple income streams, built-in affordability, that actually attracts renters even in tough times. That, my friends, is what makes this work. Now, when vacancies rise in standard rentals, co-living homes stay full because when they meet people where they are looking for value, flexibility, and even a bit of community, that's what we're seeing across our clients' portfolios. Co-living keeps producing consistent cash flow month after month. And here's the thing. Co-living isn't about chasing high returns. It's about creating stability in your own wealth. That's what lets investors sleep soundly, no matter what the headlines are saying, right? So I also want to clear the air a little bit more about co-living. There's a lot of confusion. Every time I mention it, someone says, "Oh, you mean like student housing?" No, not quite, right? Good co-living is thoughtfully designed. Each tenant has a private lockable room, often with an ensuite. Shared areas are clean, modern, and well managed. So, people imagine chaos, but what they miss is the structure. There's a big difference between co-living and those old school rooming houses. We're talking about things that attract professional, not transients. If you want to look at data, and we're going to share more about this data very soon, but on our webinar that we're going to be hosting on the 26th, I believe, I'll put the link in the chat. Now, if you want to know what's going to happen, now there's a big difference between co-living and old school houses. We typically have about 7% of our clients living in the co-living houses as students and tradies. That is because we have the right management team, and it can actually be simpler to run with a standard rental. So we're not talking about people with no income and people that are on Centrelink, and yes, they do need a place to live, but we're not talking about places that are really a rundown place. Building the right co-living in the right area will get you a better outcome, because most of our clients who are living in these properties are actually professionals, right? And we will have the percentages just before the webinar that we run. So if you're curious about how much of a percentage of the webinar the professionals are, the working professionals that live in these co-living houses, watch out for the webinar. So the truth is, co-living isn't a fad. It's a response to real life Australia today. Smaller households, higher costs, and a craving for connection. It's not a trend. It's the future of practical investing, right? So I know I've been talking about the upcoming event. It's on October 28th for our session. Co-living, deal or no deal. We'll break down real examples, real numbers, the good, the bad, the borderline, and you'll learn exactly how to tell a great co-living deal from one that just looks good on paper. And yes, we will actually have a fun twist, as we do sometimes. And I'm going to be doing a grand prize for one lucky attendee and their family. You know what? Register free using the link in the comments below. And here's the thing. Some of you have been saying, "Hey, Goro, I don't know exactly what you guys are doing beyond these properties and beers." So if you've been tuning in but haven't hit the follow button yet on Ethical Property Investments, now's the time. We actually share weekly strategies and a property of the week to help you invest smarter, not just louder. So if you want to follow us on Facebook and Instagram, stay ahead of the curve. Until next time, stay curious, and remember, doing good and money can go hand in hand. Cheers, everyone. I'll see you at the co-living deal or no deal.